Thank you for watching this video. Today we will be doing technical analysis on the S&P 500 for the week ending Friday, December 17th, 2021. And for this analysis, we will be using stockcharts.com. That is the charting service that I use and pay for, and I will leave a link to their site in the description box below this video. My name is Rodney Constable. I have over 30 years of investing experience, including over 25 years of experience trading stocks and options. I am a former financial advisor, a former vice president of a major mutual fund company, and I am the developer and president of Simple Market Signals at simplemarketsignals.com. Simple Market Signals is a proprietary trend direction and risk management model. Before we move on to the charts, I want to answer a couple of questions up front that people have been asking me in the comments section of my videos. So the first one is, no, I don't do crypto. No, I don't engage in short selling. And no, I am not clairvoyant. I cannot tell you what the market is going to do tomorrow. Okay? So I don't do crypto. I don't short sell. And I have no idea what the market's going to do tomorrow, guys, okay? And anybody that tells you, that they can predict the future and they know what the market's going to do tomorrow and the next day and the next week and this next month, run as far away from that person as fast as you can, okay? No one can predict the future in the stock market or anything else. We will come back to this chart in just a couple of minutes, but I first want to start with a weekly candlestick chart of the S&P 500 to get a big picture view of what has happened for the week, and then we will move to the shorter term time frame. This particular chart goes back to the 1st of July, so we're really just looking at the last half of 2021. For the week, the S&P 500 down 1.94% on normal volume. As you can see here, a couple of weeks ago we had a really high volume down week, which volume matters, guys. So I would encourage you to get in the habit of checking out volume. But this week's volume was pretty normal, as you can see here when you look to the left. A high volume down week is a more serious down week. This week, so far, all we've done is just pulled right down to this 10-week moving average, the green line right here. We did slightly undercut it in the middle of the week, but as you can see here, the body of the candle, where my cursor is moving here in the upper right, the body of the candle closed just above that green line, the 10-week moving average. 10-week moving average, of course, is fairly equivalent, not exact, but fairly equivalent to the 50-day moving average. And also this right now, guys, even though I know it kind of feels bad out there, a lot of people are very negative. From a technical standpoint, we have to be very accurate with the data. And from a technical standpoint, this looks like a completely normal pullback to around the 10-week moving average on normal volume. A couple of weeks ago, right, we pulled down to this orange line, which is the 20-week moving average, fairly equivalent to the 100-day, and the blue line down here, that is the 40-week, fairly equivalent to the 200. But you can see a couple weeks ago, right, we had that really high volume down week. We pulled right down to and had some trading a little bit below the orange line, the 100-day or the 20-week, fairly equivalent to the 100-day moving average right there. And this week, we pulled back half that distance, right? And we had some trading above 4,700, and this is the 6th week that we've had. 6 out of 7 weeks, right? We've had trading above 4,700. We've had one weekly close above 4,700. Last week, right, the previous week, we closed at 47,1202, and that right now stands at the all-time weekly closing high from a week ago, and the only weekly close in the history of the S&P 500 above 4,700, as you can see right there, and so, guys, overall, it just, from a technical standpoint, this looks pretty normal. It doesn't look overly alarming, and right now we're trading at 5.75%, 5.75% above the 40-week moving average. So if the market were to pull back to the 40-week moving average anytime soon, we would be dropping approximately another 5.75% below where we currently traded. And I do also want to point out here, this blue line here, that's 4,500. So 2 weeks ago, just to kind of, put a little bit more meat on the bones here, we pulled down to this 4,500 level, this lower blue line, and, just undercut the 20-week moving average, but obviously closed above it. And we've been stair-stepping higher, over the last few weeks. So from a technical standpoint, guys, this doesn't look too bad. But let's take a look at a shorter-term chart, and we'll see what that tells us. Next, let's take a look at an hourly candlestick chart of the S&P 500 that goes back to the 1st of November. So we're just looking at the last couple of months here. And the blue line, that is 4,700. We already know that 4,700 has been acting as an overhead resistance point really since November 5th, as we can see here. The all-time intraday high for the S&P 500 so far was set on November 22nd at 47.43.83. We did come fairly close this week at 47.31.99, as you can see in the upper right-hand corner where my cursor is circling. But 47.43.83 on November 22nd, that still stands as the all-time intraday high on the S&P 500. You know, the good news is this week, as we just saw, you know, we closed above the 10-week moving average, but look at how this 4,600 level has been acting as an area of support over the last few days. And here on Friday the 17th, 12/17, the lows of the day, 4,600.22 right here, 4,600.22. And you can see we have not had any trading, 4606.52, 4611.22, and 4,622. So we had no trading at all below 4,600 this week, even though this this week felt kind of violent, right? And it was, right, up and down. But we only pulled down to the 4,600 level this week, where a couple of weeks ago we were down at 4,500. So with the Fed announcement, the talk of tapering, raising rates several times next year. The fact that we only pulled down to the 4,600 level this week, guys, I'm going to call that a win, right? This, right now does not look that bad. So let's be very fair about the data. It doesn't mean that the market can't continue to sell off next week, of course, but for right now, what we know is 4,600 is acting, based on the price action, is acting as a support area for right now on the S&P 500. Now, if for whatever reason this doesn't hold, right, the market continues to roll over next week, then of course we know that 4,500 is going to be that next area that we need to watch down here, all right? So keep an eye on that. And of course that's, this line right here on this chart. And we of course tested it and, sprung off of that a couple of weeks ago, and that's this price action right here on the hourly charts. So we do have to keep an eye on that, but if next week we can stay above 4,600 and potentially start to climb back up, that is completely possible. So we'll have to watch that 4,600 area very, very closely. And once again, the S&P 500 was down 1.94% this week on normal volume, closing at 4620.64. Now let me share with you what subscribers are saying about Simple Market Signals. First, we are going to hear from KT from Michigan. I have been trading for many years. I did not realize that I have been trading in a completely blind fashion. SMS has given me the direction, literally, I've been desperately needing. This service allows you to clearly see what the market is doing. If you are remotely serious about trading or investing, you must try this service. Again, that's from KT from Michigan. KT, thank you. I appreciate that feedback. Next, we're going to hear from Rich A. from Ohio. Hi, Rodney. I want to thank you for creating Simple Market Signals and making it available to the average investor like myself. I work hard for the money that I invest, and I want to try to get the best return for my investment. Like a lot of people, though, I just don't have the time to watch the markets closely, and have been blindsided a few times in the past by market moves I didn't see coming. Needless to say, if I could have avoided those downturns, I would be much further ahead financially. This is where Simple Market Signals comes in. It takes complex market data and distills it down into an easy-to-use tool that anyone can use to see where the markets have been and are likely to go. It is sort of like a barometer that a weather forecaster uses, only easier to use. I like the fact that I get weekly updates from Simple Market Signals and also get updates anytime there are important changes in the markets. Your emails are succinct and to the point, and the signals are easy to understand. Depending on how much time I have, I can quickly scan the main points that Simple Market Signals gives me, or do a deeper dive and read about the various market sectors and their performance outlook. Either way, I get the timely and important information I need. Thank you again for doing this, and keep up the good work. Again, that's from Rich A. from Ohio. Rich, thank you so much for the feedback. I really appreciate that. Next, we're going to hear from SC from Florida. And SC writes, I manage my own money and I am not a professional, which could lead to a disastrous outcome as it has for many. Simple Market Signals is the equivalent of having a personal money manager that keeps you invested when it counts and alerts you to the potential dangers ahead. Now, I want to point out here, guys, I used to be a money manager. I sold my practice in 2016. So these are the exact words that SC from Florida wrote to me. So I just printed it as is. But I want you to understand, I cannot give advice, but this is the feedback that SC from Florida gave me. So I appreciate this. So again, SC writes that Simple Market Signals helps you stay invested when it counts and alerts you to the potential dangers ahead. The service is extremely affordable and takes the uncertainty and fear out of being in control of your own investments. I have done very well using this system and consider myself lucky that Rodney's YouTube channel came into view one day. I highly recommend this to anyone who desires an easy system to produce positive returns in the markets. Again, that's from SC from Florida, sent from his iPad. And guys, I want to point out the reason I'm using just the first and last initials is for the security of my subscribers, okay? I have hedge fund managers, very well-off, multi-millionaire clients. I have, people that are high up in various areas of the government. I have people from all walks of life. So just out of respect and security for my clients, this is the way that I'm presenting the information, just with their first and last initials as well as their state. Next, we're going to hear from FS from Massachusetts. Rodney is spot on in his reading of the markets. I was looking for a heads up to help me choose which side to use for vertical spreads. Again, that's from FS from Mass, and thank you so much, FS. I appreciate that. Next, we're going to hear from JV from New York. Now, I posed a few questions to my subscribers a few weeks ago, and this is the feedback exactly that JV from New York gave me with respect to the question. So I produced it just as he wrote it. So the first question, what do you like best about Simple Market Signals? What JV said was, one of the things I like best about Simple Market Signals is that I have an easy-to-use tool at my disposal. I use the green, yellow, and red signals along with the general trend to help me determine how much equity risk exposure I want my investments to have in the market at any one time. I will either increase or decrease my equity exposure based on those metrics. The next question, what is important about Simple Market Signals to you? JV writes, I am a conservative investor. My main goal is to preserve as much capital as possible during market downturns, yellow and red signals, and to optimize my returns during green light conditions. The next question, how has Simple Market Signals helped you? JV writes, SMS helps me to determine whether to stay the course, increase equity exposure, or take defensive positions. For example, I will add additional funds to my equity investments during green conditions and move money to cash during red conditions. And the last question, how have you benefited from Simple Market Signals? JV writes, one of the benefits of SMS is that it has reduced the stress from always looking at and analyzing market conditions and worrying about it on a daily basis. And again, this is from JV from New York. JV, thank you so much for the feedback. I really appreciate that. Here is what's new. Global access to Simple Market Signals is now available to any adult around the world who has access to YouTube. You'll have easy, convenient access to the information. Everything is on YouTube under the members area of the channel. Everything is in video format. There's no emails to mess with and no website to log into other than, of course, YouTube. And Simple Market Signals is still less than $20 per month. That's less than 67 cents per day. Your membership fee will be billed monthly on your credit card, or you can also pay with PayPal. And to become a member of the channel and get access to the Simple Market Signals information, you will need to go to the Rodney E. Constable Stock Market channel. So depending on how you found the video, you may or may not be there, but you need to make sure that you go to the Rodney E. Constable Stock Market channel, and then you're going to click on this join button. Now, if you're not signed into YouTube, you will need to sign into YouTube. All right, and then once you're signed in, then you'll see this box pop up, right? Get access to exclusive perks when you become a member. So you click on the join button and you will see the information here, what you're going to get with your subscription, of course, your membership. and then you click on the join button, and you want to add your credit card information. So as you can see here, you can pay with either a credit or debit card. Enter your card number, of course, the month and year of expiration, security code, cardholder name, and your billing zip code. So I'm going to fill all of this information in, and I will be right back. So once you hit that buy button, which is in the lower right-hand corner of that box, that previous box, you will then get this pop-up. Welcome. It's great to have you as a member. So then you can click on the See Perks. So once you fill all that out and your membership is established, then you will have access to the membership area where you will be able to see the perks, right? And then you go over to the community tab, and this is where you will have access to the various videos, and you just click on those and it'll pull those up. Okay, so I'm going to back up here, and so this is where all the training videos will be, as well as the weekly updates to the Simple Market signals that will be under the community tab. And that's all it takes to become a member. It's quite simple. So join now to start benefiting immediately from this valuable and potentially life-changing information. If you still need even more information, make sure you watch the How to Be More Successful in the Stock Market video that is on my YouTube channel. I will also leave a link to the How to Be More Successful in the Stock Market video in the description box below the video you are currently watching.